Hey, this is Josh. Today is Thursday, July 20th. Today was an extremely strong bull trend day. It's one of the strongest and most extreme bull trends I've seen in a while. Um, Prices were able to break out above the trading range on the daily chart. The weekly chart. So we're getting a test above the high of these prior highs and the high of the trading range. There's a chance the bears come back in somewhere up in here, but the buying pressure is pretty strong on this rally up. So prices may correct down, but I expect probably at least a minor second leg up, possibly a measured move up if the breakout succeeds. So today, when I came in, prices were always in short. I came in somewhere down around in here. There was continued selling overnight from yesterday's trading range. So when I came in, there was a sell climax, and it was around a measured move target based on the yesterday's trading range. It was also a measured move down based on this breakout or this measuring gap here. So this was temporary support, and at the time it looked like there was a bear channel in here, and there may have been. The bears just weren't able to hold, so it looked like there was a bear channel. So prices were at the lower end of the bear channel, off the trend channel. This was a sell climax, tight trading range. This was a okay buy setup for the two legs down, sell climax, but and a failed low one, failed bear breakout below here, final flag reversal. I thought the bulls would need a second entry, so I waited. The bulls tried for or bears tried for a failed bull reversal and low two sell setup. It triggered here. Quickly found buyers as the bears became trapped. It became an outside bull bar. So buying above this bar on a stop was a reasonable thing to do, looking for two legs up. The market became clearly always in long here. I was looking to buy below a bar. I was trying to buy below this bar, below this bar. Was unable to get filled. I contemplated buying this close, but since it was the first 3-bar rally, I did not. And prices quickly broke out above from there. So unless you took this entry, it was pretty hard to get into these trades. You could consider buying this bull follow through bar. The best entry, in my opinion, was buying below this bar. It was a weak low one. It was a weak sell setup, so good limit order entry. Yesterday's trading range high was somewhere up here. So around here, so I thought that was a likely target to at least get tested up here, or at least as close at minimum. So it was a high enough probability to buy below here for a scalp up, or you could have held for a second leg up. So that became a strong outside bull bar, bull breakout. This was a possible measuring gap. Turned into a buy the close bull trend. This was a high one buy setup. It was weak. It was a possible. I was expecting two legs down before a channel began for a second leg up, either comparable to this one or a leg one equals leg two measured move. This would be a really aggressive short entry to sell above here. Selling below here, if you believe this is a buy climax and a failed bull breakout, not an unreasonable thing to do, but it was from a strong reversal. So I was looking for a second leg up before any type of sell setup. The market, I was expecting a second leg down here. You could argue became always in short for that second leg here. I was pretty surprised about when this breakout formed. It did not come down and test a lower and at least a small second leg down. But the bears just weren't strong enough to create any type of reversal. So There were some signs of profit taking, limit order bears above here. This became a failed bear reversal, but you're buying near the high of the day. Some signs of profit taking. Okay to buy for a swing. Probably not high enough probability for a scalp. The bears tried to sell above the bar and test back down to form a trading range. At one point was a big outside bear bar, but closed as a doji. Then there was the bears attempted for a second entry below this bar, but again it's a doji bar, weak selling pressure, very strong bull breakout of yesterday's high and yesterday's trading range. So this became a failed low too, so reasonable to buy above here. You're buying into the high, but it's a failed bear reversal and a failed low too, also a high to buy setup. So probably high enough probability for a scalp, but better to take for a swing trade. This became you could consider it a wedge bull flag 1, 2, 3, or you can consider it just a breakout pullback from this failed low to breakout to new high pullback. And again, the bears were unable to form a strong reversal down. Turn into a strong bull breakout and another buy the close bull trend. This is unsustainable buying. It's climactic. I did not expect it to go this far, but you never know what's going to happen. So the buy the close bull trend ended here with this tail, signs of a weakening bull trend. However, it continued for another few bars. I was thinking this may become a spike and climax bull trend and test down for at least 2 legs. But the bears were unable to generate a strong reversal bar. You can consider this as that setup, but it was a doji, no very little selling pressure on the day, no selling pressure in this rally, so I think it was better to wait. It became a variant of a failed low 2 and a high 2 buy setup, and this is a very similar setup to back here. However, it became a final flag reversal and led to 2 legs down, and now we're just in a small trading range. The bears tried to break below here on this big bear bar, became a failed bear breakout, and now I'm expecting prices to test up somewhere probably around here, maybe here, and form a trading range. More than likely, the day will probably close somewhere near the high of the day. I don't think that the bears are going to get a strong reversal back down. It's possible, but I think it's probably unlikely at this point. So high 2 buy setup, and then the failed low 2 here, so acceptable scalp to buy above here. Quickly became a final flag reversal, so okay, swing short below here, expecting 2 legs down, probably to at least test the EMA. We got the second leg down, so first leg, the second leg down was broken down into 2 smaller legs. The bulls tried to rally off the EMA, failed, which is probably a small minor bear trend line in here. We got the break and moved to a new low, and failed bear breakout of the bull flag trading range. Sorry, slight interruption. Not totally sure where I left off, but so I'm assuming somewhere around here. So final flag reversal. Bear became always in short here for 2 legs down. Came down, tested the middle of the final flag, middle of the tight trading range. Temporarily found a small rally. Second leg down to the EMA, and bulls attempted for a double bottom bull flag. The bears tried to break out below and failed on this big bear bar here, making this a reasonable buy setup. It's an EMA gap bar. It's a wedge bull flag. 1, 2, 3, 3 pushes down. Failed bear breakout. You can also consider it a double bottom bull flag with here or here, and a micro double bottom. As of now, prices are pulling back and testing, but they have not tested below the entry bar, so probably failed low 2 and test higher. This is near the bottom of the trading range, so The bears need a strong breakout below here. So I think I forgot to mention the measured move here. So prices ended up making a measured move based on the height of this bull spike in strong rally. As far as today, there were not a lot of good opportunities unless you're willing to buy these closes, which I will buy a bull follow through bar. Like this would have been a reasonable buy setup, but since it's somewhat climactic, I would be hesitant to keep buying closes. You could consider doing it until the end of the buy the close, like here. But you just never know when it's going to become a climax and reverse down. So that's about it for the day. Mostly swing entries today because you had to buy high or take this reversal trade. This was pretty much the only reasonable sell setup. Selling above this bar was not unreasonable, expecting a small test down. However, which I'll talk about that entry in a second because I have a couple questions from another trader. So I'll get to those now. Okay, so first question, how to recognize a buy or sell vacuum or climax compared to a healthy spike, like a breakout that can lead to a measured move. You have to remember every trend bar is a breakout, a gap, and a climax. And the best teacher of learning this is experience. But I think there are a couple questions you can ask yourself that can help you to make an educated guess as to whether it's a breakout gap, a measuring gap, or an exhaustion gap. And one of those pertains to the market cycle. So where are we at in the market cycle? Are we breaking out from a strong reversal like here? In that case, it's more likely to become a breakout gap, and then the next gap should be a measuring gap. Like this gap here would be a measuring gap, and for a while it was. And I think there was some profit taking around. Thought there was, but so the market cycle is a good indicator. So if prices reverse up from a strong reversal, like here, it's probably a breakout gap. Then the next gap is a measuring gap, and then at the end of a trend, it's likely to become an exhaustion gap. So like this gap here was less likely to become a breakout gap because it's at the end of a bull trend, so it's more likely to become an exhaustion gap and get filled. And you can see the price is tested right to the bottom of that gap and found temporary rally. But so that's one way to figure it out. Also, if prices are in a trading range, then or a channel, then vacuums are pretty common. So let me see if I can find a good example. So nothing that's standing out quickly. This could be considered one here. So prices were in a small trading range, had formed a double bottom here. Prices came up to the high of the trading range. Bull bar closing on its high. It looks like a bull breakout, but it turns out it's just a buy vacuum test of the high of the trading range. Same with here. Looks like a strong breakout, but prices failed to break out below. So you can consider this a sell vacuum. I was hoping to find a better, like a really good example. Maybe if I come across one, I'll post another video on it. But so basically, figure out or think about where we're at in the market cycle. and that's usually a good way to tell. Okay, so next question, your 20 pip stop loss is for any market condition, even a spike, channel, or trading range, based always from your entry point. Yeah, that's what I use. It doesn't matter. It doesn't matter where at in the market cycle we are. That's just what I use. A day like today, with the volatility is pretty high, you might consider increasing it maybe to 30 or 40 pips. But I use a 20 pip stop all day, and I was okay. So it's really just a personal preference, but you can always adjust your stop based on the price action below swing lows and stuff. But I tend to just enter with 20 pip stop and manage it based on what happens next. When you get stopped out, does it mean that you stop looking to enter in the direction that you were before, and what do you focus on? Well, when I get stopped out, it's usually because I did something stupid, like traded against the always in position, or entered on a stop order, in a bad place. Or lately, I've been trying to swing too much, and that has led to a lot of stop losses. But what do I focus on? My focus and what I'm trying to get back to is scalping with the always in direction. So if it's always in long, I want to be scalping looking for buy orders. And do I stop looking in the direction that I was before? If I was trading against the always in position, then yeah, I would say, well, that was stupid, and I would, try to do the right thing on the next trade, or wait for the next trade and then try to do that. But there are some reversals that I will consider taking. There are 4 of them I mentioned yesterday, like a climax with a reversal, a failed breakout of a trading range, a final flag reversal, and I'm forgetting one, but I don't know. My brain's dead right now. So next question: you don't go counter trend, but price does change from one trend to another. Do you then wait for higher high or lower low to enter? I try not to trade counter trend unless it's one of the. Oh, I'm sorry. Now I remember. Wedge reversal. That's the 4th entry that I like taking, preferably second entry. So when do I wait for a higher high or lower low to enter? Usually, what I'm doing is I wait for the always in position to change, and then I'm looking to buy below a weak sell, like a weak low 1. Not really low 2s, but above a failed low 2, I would buy. I don't necessarily wait for a higher high or a lower low. I'm mainly focusing on the always in position and limit order entries. But like I said, I will consider some swing trades, the high probability swing trades, looking for 2 legs in the opposite direction. So those are technically counter trend, but they're in a sense with the new trend. So okay, next question. Can you talk about final flags and specifically small final flags like 1 bars, and how do you identify them? Final flags I can understand that they're a little tricky for a beginner especially. But a final flag is where it's the last flag of the trend. So like here you had a strong bull trend, prices went sideways, tried to break out above with the trend and failed, and result in a reversal. So like this is a small final flag. So usually with the final flag reversal, it's when bears or bulls are taking profits, and then the opposite. So like here the bears were taking profits. It's at the bear trend channel line at a new low, measured move targets, and so the bears are unable to generate enough strength to break out below because all of the strong bears have exited. So the strong bulls are able to take control and rally the market. A 1 bar final flag, I would say they're more common in a trading range, and if prices are in a trend, I would probably not focus on a 1 bar final flag, but I'll see if there was an example yesterday with yesterday's trading range. So here's another small final flag. You can consider this a small final flag. You can consider this entire trading range here as a final flag where the bear breakout today failed. As far as a 1 bar final flag, you can consider this, not really, but usually like at the high or low of a trading range, so you could kind of consider this whole thing as a small final flag, but it's more of an expanding triangle. 1 bar final flags aren't necessarily as common, but you can kind of consider this a small 1 bar final flag. Actually, I think there was a day earlier this week that there was a couple. Seemed like there was. Alright, so I got cut off, but I was looking for a 1 bar final flag. Most final flags are from a tight trading range and a trading range day. I had to go to a higher time frame chart to find a decent one. This is still not a great example, but it's an example. So here prices were in a trading range and small second leg down, and then you had this small bull bar. It's a pause bar. Failed bear breakout. So you can consider this a small 1 bar final flag. It's also a tight trading range and final flag reversal. But as far as 1 bar final flags, not a lot of great examples, at least nothing jumping out. Like I said, they mainly come from a tight trading range at the end of a trend or at the high or low of a trading range and result in a failed breakout of the trading range. If I come across one in the next few days or in the next couple of days trading, then I'll try to make a point to point it out. You could kind of consider this a 1 bar final flag, so small pause, failed breakout, and reversal, but like I said, not really very many great examples. As far as how to identify them, just basically look for a tight trading range, and then if prices fail to break out with the trend direction, then it's likely to become a final flag and a reversal back in the opposite direction. And the alternative is for the final flag to fail and then prices to reverse back with the trend, so it becomes a breakout pullback. So like say here we have the final flag reversal, and if instead of prices leading to 2 legs down, if this reversal had if this had rallied strongly, then it would have become a failed final flag and a breakout pullback buy setup. So hopefully that makes sense. I'm not totally sure that I explained it that clearly, but hopefully I did. Next question, can you put an example in which your trade was an acceptable trade, but within the next few bars you see that it is telling you that it wasn't? In a spike it's easy, but in other circumstances, yeah, sure. So today, a good example, I sold above this bar thinking at least a small second push down, probably enough room for a scalp, expecting a second leg down before the channel began. However, instead, the bar closed as a strong bull bar, and so I exited because that's not what I expected. I expected prices to come down and test below this bar and maybe form a double bottom bull flag or some other type of second leg down. So whenever I was surprised by this bar, I just quickly exited. Yesterday there was some as well. So yesterday prices were in a trading range. I sold below here. I tried to cancel the order whenever prices didn't tick below the bear bar, but it was too slow and ended up getting filled below this bull bar. So instead of exiting, I still expected a test down. So I held. My stop was somewhere up above here. I figured if prices broke above here, I could potentially scale in, or I would just hold through the failed breakout, which is what happened here. Failed bull breakout of the bear flag trading range. So, and I also held through this rally after this strong reversal, expecting a second leg down. Let me think of another example. So, okay, so I bought above this bar. It was a second entry, final flag reversal, sell climax, failed bear breakout of the low. I bought above here, did not like the entry bar, didn't care for the bull follow through bar, considered exiting, but I figured it's a tight trading range at a new low, so I figured it may test a little lower, but I didn't expect it to go 20 pips down. So I held and was able to get out. I got out somewhere, I think around in here, whenever I wasn't satisfied. I expected a second leg up and it tested up to here, but this strong reversal led me to exit with a small profit. Let's see, maybe the day before. I think I honestly don't remember, but I think I bought somewhere in here for a failed low too, and held. But was disappointed. I really can't remember that far back, to be honest. So I'll go back towards today. Other than that entry, I bought below here. Price, I had a 20 pip stop. My 20 pip stop was somewhere down here. Prices went, I was too slow the first time. Prices ticked below here, quickly reversed up to the close and would have reached my scalper's profit. But instead I was too slow and I bought later than I should have. And as I was filled, prices went against me 10 pips and I thought, well, that's not good. I thought maybe this was going to be a failed bull breakout and reversal, but again, this was not a strong sell setup, so I wasn't necessarily really worried. It happened so fast. I was caught off guard, but I held and luckily, you know, was able to get out with a profit. And then I bought above this high 2 buy setup and exited somewhere when this bar was forming, figuring that prices were probably going to come back down. I think I exited somewhere right in here. But yeah, it's sometimes trades don't work out. That's the way it is. You have to be comfortable with uncertainty. It's not an easy thing to do, but I would like to say it gets easier with time, but I don't necessarily believe that. I think sometimes it gets harder. Because the important thing is to just try to remove emotions as much as you can and stay focused and objective. Like I said, it's not always easy, but that's what you got to do. And one of the best ways of doing that is decreasing your position size down to a position size that you can handle consecutive losses without you know, getting down in the dumps and all depressed and stuff like that. Like I've tried trading the 60 several times in the past few months, and every time I can't handle it because it's too much for my circumstances right now. It's just too much money on the line. So every time I've gone to the 6E, I found myself coming back to the EURUSD. So for now, I'm going to be staying here at least until I build a lot more confidence and I'm more comfortable with a larger risk. So yeah, I think that that's important to definitely trade a small position size. That way you're not too you have to also understand that you can't trade so small that you really don't care and you just enter willy-nilly and let prices go against you too, because like say you had sold up here, you know, with a very small position size, unless you used a huge, even if you used a huge stop, you're going to end up losing money. So I think that position size is a really important factor. You can't trade too small, but you can't trade too big. So the trick is just staying within your comfort level as you grow and mature as a trader. So hopefully that answers some questions. And if anybody else has any more, feel free to leave comments below. All right, hope everybody has a good night.